China just pulled the trigger on the biggest economic stimulus since the pandemic.
Economists say China has unleashed a quote-unquote stimulus blitz. The country's central bank is leading the charge here. It is pumping more money into the economy. Loans are being made cheaper. One big area of focus is mortgage.
Remember those videos about the Chinese economy collapsing and that it never happened? Except it almost just did, but then it didn't, because China just did one of these. They injected some liquidity into the system. And you remember what Robin Williams said about liquidity?
I talked to them about being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday.
We're talking trillions of yuan being pumped into their system, interest rates slashed, and banks given more financial liquidity and government support flowing into their real estate sector. And this isn't just a story about China. This is going to have a huge effect across the entire global economy, especially across US markets, which will have an effect on our investment portfolios. And that's because China is the world's second biggest economy. And if they sneeze, the rest of the world could also catch a cold. And the stimulus package could end up causing what people like to call a reverse market crash, where instead of the usual collapse people associate with crashes, we could see an explosion in asset prices. Meaning, if you like to invest your money, your portfolio and your 401ks could be affected. So in today's video, I want to help explain exactly what this means if you're invested in stocks and bonds and Bitcoin, and how this new round of stimulus will affect everyone. So let's get into it. To understand why China is doing this, we have to look at their economy. Because after the pandemic, China's economy never really recovered. Their real estate sector, which makes up a huge 30% of their economy, is not doing good right now. Developers like Evergrande are collapsing under the weight of their own debt. There's unfinished properties that litter the whole country, and consumers are refusing to spend money because they've lost confidence in the market. And when people stop spending in China, a country where 70% of household wealth is tied up in real estate, it becomes a downward spiral of what's called deflation. In other words, prices start to fall, which sounds good at first, but deflation is like poison for an economy. It discourages spending, incomes stop growing, and companies make less money. And China's economy could have easily turned into a full-blown recession, which is also why the People's Bank of China stepped in and started up the good old money printer, and here's how much money they just printed. First, they lowered what's called the reserve requirement ratio for banks by 0.5%, and that's estimated to free up about 1 trillion yuan, or roughly $142 billion US dollars for new lending. This money is now available for banks to lend to businesses and households hoping to jumpstart the economy. But that's not all. The bank also cut its 7-day reverse repo rate, which is basically the rate at which banks lend money to each other in the short term. It now went down from 1.7 to 1.5%. And I know that doesn't sound like a lot, but it's a big deal because it lowers the cost of borrowing across the economy. Think of it like shaving off a little bit from your mortgage rate, which might not seem like much, but it adds up into billions of dollars in savings across an economy the size of China's. And for consumers, the central bank has announced a 0.5% point reduction in the interest rate on existing home loans. For context, if your bank called you right now to lower your 30-year mortgage from 6% down to just 5.5%, on a $400,000 home loan, you would save approximately $45,000 in total over the life of the loan. Now, for China's economy, it's estimated that this will save 50 million households around 150 billion yuan, which is about 21 billion US dollars a year. But wait, there's more to this package. China's also propping up its own stock market because the People's Bank of China announced a 500 billion yuan, roughly 70 billion US dollars, to help institutional investors like their insurers, brokers, and funds to buy more stocks. Essentially, they're making it easier for institutions to access liquidity to prop up the market. And on top of that, China's also introduced a 300 billion yuan, about 42 billion US dollars worth of a loan program to help companies buy back their own shares. And that's like if the Federal Reserve and Papa Powell just called up Apple and said, "Hey Tim Apple, we'd like to extend to you a loan at our ultra discounted interest rate so you could buy up your own stocks." Could you imagine what that would do to the stock market? You don't have to, because we've done it before. During the 2008 financial crisis, the US launched its own bailout package, TARP, the Troubled Asset Relief Program, which was a $750 billion effort to stabilize our financial system, which eventually, of course, led to asset inflation in the years that followed. And here's where things get really interesting. The question is, what happens to investors here in the US when another country the size of China starts to stimulate their economy? So first, stimulus packages, aka money printers, typically mean asset values go up. It means we're probably going to see stock prices in the US go up as well, even though this is China's money printer turning on. Because historically, every time a major economy rolled out a massive stimulus package, there was a boost to equity markets. And with China's stimulus package, commodities are going up, global growth expectations are changing, and the companies that have exposure to China will probably benefit. If you look at a commodity-based company, for example, those are up. ExxonMobil, at the time of filming this video, for example, is up 4% in 1 week. And full disclosure, I own some ExxonMobil in my stock portfolio. It's been an amazing dividend stock. But there's also another one, ticker symbol FCX, or Freeport-McMoRan, which deals in mining things like gold and copper, which I don't own in my portfolio. But that stock is up 8% in 1 day and over 13% in 1 week. And that's insane when you remember that stocks are supposed to go up 8 to 10% in a year. And this is not a coincidence. And a big part of why it happens is because of China's new stimulus package. And let's not forget about dividends. In times of asset inflation, companies pass those gains onto shareholders in the form of higher dividends. So if you're holding dividend-paying stocks, especially now that the Federal Reserve has lowered the interest rate by 0.5%, that means more cash from inflated asset prices that could be passed on to shareholders in the form of increased dividend payouts or even share buybacks. And of course, Bitcoin, which I just got a chance to talk about to Michael Saylor recently, is also going up partially thanks to China's stimulus. Because every time a government steps in with more money, the story around fiat losing its value comes up. In Bitcoin, because it has a fixed supply of 21 million coins, acts like a universal global vacuum that sucks up all the extra printed money. And that's why Bitcoin is also up. Which is also why this video is sponsored by Bybit. Bybit is a reliable and user-friendly cryptocurrency exchange that offers a wide variety of trading options. Whether you're trading Bitcoin, Ethereum, or a range of other cryptocurrencies, Bybit has got you covered with their advanced tools and features that are suitable for both beginners and experienced traders. One of the great things about Bybit is their 24/7 customer support, so you can get help whenever you need it. They also offer high liquidity, meaning you'll have no trouble executing trades quickly and efficiently. On top of that, Bybit provides low transaction fees, making it one of the more cost-effective platforms for crypto trading. If you're interested in signing up and exploring the platform, there's a link in the description below this video. By clicking on that link, you'll get started with Bybit and even have access to some great bonuses for new users. Thanks again to Bybit for sponsoring today's video. For China's falling property market is all designed to pump liquidity into the system and essentially prop up asset prices. Now, in China, we're already seeing how this stimulus package is making people with assets richer. The Hang Seng Index, for example, went up over 4% the day the stimulus was announced, which was the best day of the market since 2020. Companies like Alibaba, JD.com, and BYD are already seeing double-digit percentage gains. And this could be just the beginning because it's not just about China. When China pumps liquidity into its economy, it creates a demand for materials that build stuff, like oil and copper and steel. Guess what? the prices of those commodities are also going up. Both copper and aluminum went up over 5% in the last 7 days. All of this within hours of China's stimulus announcement. And historically, when asset prices in one part of the world inflate, we see a spillover into other markets across the world. In 2012, for example, the ECB, the European Central Bank, introduced aggressive monetary policies to stabilize what's called the Eurozone. So countries like Greece, Spain, Italy, which were on the brink of default, got rescued. That year, the US stock market went up 13.5%. In 2013, Japan introduced fiscal expansion policies and loose monetary policy. Guess what happened to the stock market that year? VOO, the S&P 500, went up over 29.5%. The point is that when big economies inject more money into their system, even if it's outside the US, it has a ripple effect on US asset prices too. Not in all cases, of course, but in many cases when there isn't some black swan event and some crazy recession that gets triggered. So what does this mean for the future? Over the next 6 to 12 months, I expect China to roll out even more stimulus packages. Other countries, especially in the Eurozone, might follow with similar moves. Lower interest rates, more liquidity, and so on. This could lead to inflationary effects that push asset values higher, especially in stocks and cryptocurrency. For me personally, I'm going to keep dollar cost averaging into the market. I believe in the long-term potential of the S&P 500 and Bitcoin, so I'll continue reinvesting my dividends and sticking to my strategy. But that's just me. What do you think? Will China's stimulus cause a global market surge, or are we heading toward a bubble? Let me know in the comments below. And if you enjoyed this video, don't forget to smash the like button and subscribe. Thanks for watching, and I'll see you next time.